What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So what happened today? It says the S&P 500 is flat to close out a 6% May gain as investors continue to look past trade policy confusion. However, don't let this trade policy confusion confuse you and keep you from investing. Ignore the noise and continue to dollar cost average into the stock market in good growth stocks. If you are unable to pick your own stocks, please consult with a financial advisor to do it on your behalf, right? Do not let this noise confuse you. Things are down, things have been up and down. That's just the flow of the stock market, right? But the noise can keep you from investing. It can scare you away because we all know about fear. Fear can keep you in your place and it keeps you from doing what needs to be done. Remember, if you don't remember, but I remember hearing, I think it was Les Brown who said, fear stands for false evidence appearing real. It's not real. But investing in stocks that continue to go up in value over time is real. And it's where a lot of rich people make their money. That's where a lot of rich people keep their money in these investments. And you need to do the same. However, there are multiple ways to make money. And investing in stocks is only one of them, right? It's not the end all be all. But it's a good way to diversify your portfolio. So either way, let's get to the news. It says the S&P 500 was little changed on Friday to close out a big winning month as investors shook off trade war fears. President Trump said China violated its preliminary trade agreement. And I just told you what fear means. Don't believe it. I mean, there are issues between the U.S. and China, true. But do not let this scare you or cause you to have fear inside to keep you from investing. All right, because when the stocks are low, that's when you need to buy. All right, so the broad index inched down 0.01% to end at 5,911.69 points. The Nasdaq Composite slid 3.2%, while the Dow Jones Industrial Average was up 0.13% to finish out at 42,270.7 points. So Friday's trading session marked the end of a strong May trading month with a chunk of the rally following a trade deal announcement between the U.S. and UK investors. Investors hope that it could pave the way for more agreements with other countries facing duties. Excuse me, I did burp a little. I'm drinking water. Please drink your water. Consume your water, people. So, it says that the S&P 500 added 6.2% this month, while the Nasdaq surged 9.6% in that time. Both notched their best month since November of 2023. The 30-stock Dow has gained 3.9% on the month. I gained money this month. Things have been down since starting February, March. You know, I gained everything back this month, right? All that I lost, I gained back. That's because I continue to invest. So for the week, the S&P 500 jumped 1.9%. While the 30-stock Dow rose 1.6%, the tech-heavy Nasdaq advanced 2%. Stocks initially tumbled in Friday's session after Trump said in a social media post that China violated its current trade agreement with the U.S. So you mean to tell me because of a social media post that drove the market down? But it happened. So later in the trading day, a Bloomberg report citing people familiar said the administration plans to broaden restrictions on China tech sector, right? That came after Treasury Secretary Bessent said in the Fox News interview that U.S.-China trade talks are a bit stalled. Investors are now wondering if or when a long-term agreement between U.S. and China can be reached. The administration has found its contentious plan for broad and steep levies in legal limbo. So legal concerns hit a boiling point after the Court of International Trade on Wednesday night halted the majority of Trump's tariffs. However, an appeals court granted a stay on Thursday afternoon, allowing the duties to remain in place until next week. So the Trump administration considered using a provision of the Trade Act of 1974 to implement tariffs of up to 15% for 150 days, according to the Wall Street Journal. So the legal battle around tariffs offers the latest dose of uncertainty for what was already an uneasy market. Investors have contended with macroeconomic concerns tied to tariffs and worry that the shakeup to U.S. trade policy could cause a recession. It's an awakened time, said Jay Hatfield, CEO of Infrastructure Capital Management. If you're an investor, you want to bet on good earnings, not good sweet tweets about tariffs. Exactly. If you are an investor, you should be concerned with good earnings, like Nvidia's earnings report, not tweets and social media posts that these news outlets are saying what drove the market down. Here's the thing, that's happening now. That's a whole bunch of noise now. But what about when that noise stops and those that straddled the fence and did not invest because of this noise, and when the market and things open up and things shoot up? These companies' stock prices start to shoot up, and those of us that have been buying these stocks over time while they were selling at an all-time low, we end up making a ton of money. To me right now, I think we have a good 5 years. What I see happening is a lot of noise, a lot of fear being put in people's minds to keep them away, right? And when this technology starts to be implemented by companies, it's going to replace a lot of people, not all, but a lot. It's going to create new things. It's going to also create new streams of income. It's going to create new wealth. It's going to create new ideas. And a lot of people are going to miss out. I think you need to start investing now, people. Now I understand why others who have made it have an attitude of they just don't care about other people. Because when you try to help people, they don't listen. When you try to tell them to do what you've done and what you're doing in order to have all that you need in the future, and they don't listen, it's like, why waste your time? Why waste your breath? Why continue to preach and preach and preach and try to help people help themselves? Not just give them a handout, but try to have them do what you've done, follow your plan, which takes time, discipline, effort, patience, and a slew of other things, right? It's not going to happen overnight. Like on these social media posts where you may see someone who said like, oh, I am this person now today. But what we tend to forget is the backstory of that 15 years where they put in a lot of work. They had a lot of ups and downs. They had a lot of failures. However, they continued to persevere. And now they're successful. You see them now. It didn't happen overnight. You may have just heard of them today when you didn't hear of them last night. But there's a lot of years of blood, sweat, and tears that went into that success. So do not think that you can just become an overnight success. Slow and steady wins the race. You know, take your time. It takes time because there's a lot that can be will be and should be learned along the way, along that journey. So you should want to take your time so you can learn the lessons and continue to learn. Even when you get to that high point, you need to be able to manage what you've accumulated and then also accept more that's coming, because more will come. Because once you open that Pandora's box, that door of just happiness, wealth, good health, is going to continue to come, because now you know the blueprint in order to make it happen. And you will be a fool to stop following that blueprint, right? Why go so far forward only to take steps back? Either way, here nor there. So I think you guys get what I'm saying. So yeah, that's pretty much it in the stock market news today. You know, a lot of stocks went down, like the gains Nvidia had on yesterday pretty much went away because Nvidia went down $4.06 yesterday. Well, not yesterday, but today. It's Saturday morning where I'm located already. So today is Friday, the day that, yeah, it's Friday. So Nvidia closed out at $135.13. My information technology ETF, FTEC, lost 79 cents today, closing out at $180.43. Broadcom gained 10 cents. I'll take that today, closing out at $242.07. Palantir gained $9.46 today, closing out at $131.78. My S&P 500 ETF, SPLG, lost 7 cents today, closing out at $69.33. Tesla lost $11.97 today, closing out at $346.46. Now I want to just go over something right quick. Like the S&P 500, if you are unsure on what stocks to invest in, like, you should have a diversified portfolio. And I will say this, the S&P 500 is already diversified. Like, you could invest in VOO, you could invest into SPLG, which are S&P 500 stocks. You know, VOO is managed by Vanguard, so, but VOO costs more. But VOO and SPLG, they both contain the same stocks, the 500 largest companies in the United States. 500 companies. So there are 500 companies packaged within that one ETF, right? So you have Tesla in there, you have Google in there, you have Microsoft, you have Meta, you have Amazon, you have Nvidia, so on and so forth. Johnson & Johnson, Starbucks, the 500 largest companies in the US. So you can easily invest in that diversified portfolio. And you know, every day that the stock market is open, not all of those companies are down. Like you can see, Palantir was up, Tesla's down, Nvidia's down, Broadcom's down, but Apple was up today. Microsoft was also up today. So it kind of averages out. That's why my SPLG only lost 7 cents, because it took the averages, the average gains and losses of those 500 companies, and I only lost 7 cents, which isn't bad. But let's say all of your money was in Tesla, that one company stock. Say you had thousands of shares of stocks in Tesla, and you lost almost $12 today. That's 12,000, or depending upon how much you have in Tesla, you just lost thousands of dollars, vice only losing maybe a couple of $100 from the S&P 500. So I said all that to say, you know, the S&P 500 is a safer bet than, say, an individual stocks, because within that S&P 500, again, you have 500 companies, and it's managed by, say, Vanguard, or is managed by these other SPRD, is managed by other people. They manage it for you, right? If there's a company that no longer fits the criteria to be, you know, part of the 500 largest companies in the U.S., the manager of that fund will remove that company and replace it with another. You will have to do no work. You don't have to try to find the best stock. These companies are doing it for you. So the S&P 500 is already diversified. So it's safer to have your money there. And also, when you do your research, you will find that over the last 100 years, on average, the S&P 500 has brought back 10% returns. Now, you will have years where the S&P 500 is down 8% or down 10%, but then the next year it could be up 15% or 20%, so on and so forth. But on average, for the last 100 years, the S&P 500 has brought back 10% returns. So that's good. So I'm going to end that here on that note. So you guys like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, think, people. Mind your money business. Mind your business. Mind your business. Start doing the things that you need to do to take care of yourself by getting out of debt. Get out of personal loan debt. Get out of car loan debt. Get out of student loan debt. Get out of credit card debt. Get out of all forms of debt. Create your emergency fund of 3 to 6 months. Set up your kids' college funds while you can. Invest up to 15% of your income into your retirement fund. If you have a mortgage, pay that bad boy off as soon as possible. After you paid off all your debt, then roll all the money that you were paying on debt into your mortgage. Get that mortgage paid off. And then once you have your mortgage paid off, you have no more debt. You have full control of your money to do whatever you want to do with it. You can invest more. You can give away more. You can buy things for cash by charging your credit card. You can live more smarter. All right. So, disclaimer, I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel is for entertainment purposes only, so please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed weekend. Continue to invest. Start investing. Do not straddle the fence. Stop remaining fearful. Dream, imagine. Start changing your thoughts. Start changing the things that you're paying attention to, especially if they're negative or fear-based. Find a different group of friends if you need them, or find a friend. Hit me up. We can talk. I don't mind. Yeah. All right. So you guys take care. Peace.